There's benefits that real estate investments offer that you cannot find in stocks, bonds, or other things. And I think one of the most powerful benefits is that these are hard assets. They're really not going anywhere. Usually, there's a relative scarcity with real estate. There's only a finite amount of land in infill markets, and certain types of real estate, like residential real estate, they're essential assets. You have to live somewhere. So I like the fact that they're hard assets, many of them essential assets, scarce assets, and they produce cash flow. I have great admiration for friends that went into venture capital and are going to be able to figure out what the next Facebook is going to be, or what the next. To me, there's much brighter, smarter people that are trying to find those needles in the haystack. Real estate, to me, it's much more simple. I like the fact that real estate investing is not rocket science. Most of the decisions, the key decisions when you're making real estate investment decisions, involve common sense, which you can't always say with the next .com pipe dream. Having said that, it's one of the few asset classes where trading on insider information is not only legal, it's essential. And that inside information that we have about an asset or where a seller is, there's a lot of friction in the real estate investment transaction market, much more so than stocks or bonds. So that's one of the ways that we exploit the market opportunity, is that we know something about an asset, we know something about a seller, they know something about us, that creates an opportunity. There's obviously great tax benefits to real estate. There's depreciation deductions that many investors can take advantage of. There's tax-deferred exchanges that many investors can take advantage of. It's from an inflation hedge standpoint, it's one of the most compelling investments that are out there. The thing we really like about what we're doing here in Southern California is we're playing in a market that is dominated by smaller mom and pop, less sophisticated investors who really don't know what they own. They don't recognize that the asset that they have is underperforming its market potential, and they don't have the knowledge or the resources or the stomach to want to get it there. And so if you're a sophisticated investor like Paladin, and you know how to increase cash flow, I've been doing this for over 30 years. We've been doing it for nearly 30 years at Paladin. We've got a proven track record in doing that. If you know how to increase cash flow, if you're able to execute a value-added strategy in a low cap rate market, chronically low cap rate market like Southern California, where we focus, then you can generate disproportionate returns compared to other markets. In a 4-cap market, every dollar of increased cash flow that you can generates $25 of value. So, there's great economic opportunity and ability to actually get roll up your sleeves, get some dirt under your fingernails, and work an asset to increase cash flow. And a low cap rate market and conservative capitalization rewards your efforts quite dramatically. And I guess maybe the last thing I'd say, Adam, is there is a certain amount of pride that I have in what we do. When I'm down visiting our teams down in Brazil or Mexico or Colombia, and I'm driving by one of the housing developments that we've built, and we've built over 40,000 housing units down there. I take a great amount of pride in that, because there's huge housing deficits down in the region, and we're doing a small part. We've only tapped into 40,000 of the probably 10 million units plus housing shortage in the markets where we're active. But it's something you can feel really good about. And when I get the feedback from our tenants of the properties that we've upgraded, And here in Los Angeles, there's a lot of pride in that. And it's nice to be able to drive around and point at things and say, hey, I helped do that.